Pressure's building on the Reserve Bank to cut interest rates next month after inflation hit a 13-year low. Inflation rose just 0.5% in the June quarter, taking the annual rate to 1.2%, the lowest since 1999. But economist Joshua Williamson says the Reserve Bank expected this and won't be moving.
The expectation of a low inflation reading was already baked into the policy cake. I think where we are now is quite a sweet spot for the Reserve Bank. We've got low but sustainable inflation, and I think the Reserve Bank's view that they've had that the glass really is half full on the economy more generally cements the case that they're unlikely to actually cut rates in August.
Taking a look at the markets now, and the Australian dollar took a dive following the release of the inflation figures. It fell below 102 US cents. Right now it's just above that though. The ASX 200 trimmed back earlier losses and ending down around 0.25%. Worries over Greece's ability to stick to austerity measures and Spain's increasing debts weighing on markets. Looking across the region, and markets are heading down. And on commodity markets, trade is mixed, gold on the rise. Victoria's car industry has been dealt another blow with parts supplier CMI Industrial closing 2 factories. CMI went into administration in April, and administrators have announced the Campbellfield and West Footscray factories will now close, with 119 jobs to be lost. The factories, which supply Ford as well as other automotive companies, will be shut down in October or when current orders are met.